Applied Digital stock is up 190% this year. It's trading at around $22, down 9% from last week's high. So the real question is this just a dip or the start of a bigger drop? Well, this company has pivoted from chasing crypto to building AI-optimized data centers, and now it's sitting on $11 billion in contracted revenue thanks to CoreWeave. For context, last year's revenue was only $144 million. That's suddenly like a small cafe suddenly booking a 15-year catering deal with Amazon. The scale here is insane. But what most people are missing is that none of that revenue matters unless Polaris Forge 1 goes live in 2025 and on schedule. If they miss their targets, the stock is going to slip. If it hits, the company is looking at $733 million in annual cash flow. My name is Rick Orford. I've been trading since 1999, and I am not a financial advisor. It's a good thing. It means I'm not going to sell you something that you don't want. I break down the numbers so retail investors can make smarter, more confident decisions with their money. And today, I'm going to show you whether Applied Digital is a buy the dip play or a trap dressed up as an AI story. Founded in 2020 as Applied Blockchain and headquartered in Dallas, they rebranded in 2022 to Applied Digital and shifted their focus to building advanced infrastructure for artificial intelligence and large-scale data centers. That is a huge pivot from chasing crypto hype to building the digital foundation that AI requires. And that pivot is exactly why Wall Street is starting to take notice. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/RickO to get your 10 stock picks right now. Earlier this year, Applied Digital decided to sell their cloud business to focus entirely on data centers. It would appear they're doubling down on what they believe will define their future. And when a company cuts loose all their distraction, it usually just means one thing: conviction. Applied Digital's Compute as a Service, or CaaS, makes high-powered computing simple and accessible by offering secure, fully managed systems built for AI, machine learning, and rendering. The company delivers faster results and lower costs without the complexity of managing your own infrastructure. Think of the computing power like electricity. You rent what you need and when you need it. So you can say that this isn't just about servers, it's about turning compute into a utility. Applied Digital also develops purpose-built data centers engineered specifically to support AI factories, combining advanced architecture with intelligent software to deliver scalability and efficiency. Facilities are strategically located near renewable energy sources, such as wind farms, to reduce carbon footprint and improve natural cooling. This is a cost-effective and performance-enhancing solution. Translation: they're cutting costs while future-proofing their operations. And in this game, margins matter. Applied Digital operates through 2 primary segments: data center hosting, which offers ready-to-use infrastructure that's designed for power-intensive computing. Applied Digital currently operates 2 North Dakota sites with a total capacity of about 286 megawatts dedicated to this segment. And as of the full year ending May 31st, 2025, this segment represented all of the revenue from computing operations, supported by, of course, one active crypto mining customer that's still under contract for the next 2.5 years. But there's a problem. Right now, revenue is basically tied to one customer, and that's a big risk unless this segment can deliver. Their high-performance computing hosting segment, or HPC, on the other hand, is building Polaris Forge 1. And this is a campus in Ellendale that'll include 3 AI-optimized facilities. Management anticipates that the initial 100-megawatt facility is going to go live in this year, in calendar year 2025. If this launch hits on schedule, it changes everything. If it doesn't, investors could start to lose patience. Applied Digital stock recently closed at $22.15, down from its 52-week high of $25.61 that it hit just earlier in September. Year to date, the stock is up 190%, and over the last 52 weeks, 170%. But over the last week, it's down about 9%. So the question becomes, is this a buy the dip moment? In fact, it's a question that comes up a lot in my Discord channel because fear, it's big, right? And this entry point is very important. What do? Buy low and sell high. That's the idea. And that's a catch because sometimes the dip is a setup and sometimes it's a trap. So the stock charts, they tell us where it's been, and the catalysts, well, it gives us an idea about the stock's potential. And one big catalyst, of course, is CoreWeave. On June 2nd, Applied Digital entered into 2 15-year agreements with the AI hyperscaler CoreWeave to provide 250 megawatts of critical IT load at Polaris Forge 1. These agreements are projected to generate about $7 billion in contracted revenue over 15 years. So in plain English, that's like locking in customers before the doors even open. That is huge. Then on August 29th, just a little over a month ago, the company finalized an additional 150 megawatt lease, increasing the total capacity to 400 megawatts and boosting contracted revenue by an additional $4 billion, bringing the total to $11 billion. For a company that just generated $144.2 million in fiscal 2025, securing $11 billion over the next 15 years is transformational. If all goes according to plan, that $11 billion will translate into about $733 million a year in additional revenue. That's not a forecast, that's contracted backlog. So the only question now becomes is can they actually deliver? And then another catalyst is the HPC campus itself. Polaris Forge 1's initial 100-megawatt AI-optimized facility is expected to begin generating revenue this year in 2025, followed by an additional 150-megawatt facility to complete one of the largest AI-focused campuses in their portfolio. And as capacity ramps up, revenue recognition is going to follow, turning contracted backlog into cash flow. And this is the moment where promises, they become dollars, and Wall Street is going to be watching closely. Beyond that, AI infrastructure demand is surging as major platforms ramp up their data center spending. That trickle-down effect, where giants invest billions, pulls in second-tier builders and enterprises that rent capacity rather than build it. So you could say that Applied Digital is selling the shovels in the AI gold rush. And then, of course, we have the institutional backing, which currently sits at 65.67%. For example, companies like NVIDIA and Mitsubishi UFJ Asset Management have large stakes in the company. When the smart money mix includes hedge funds, global asset managers, and top-tier Silicon Valley companies, attention follows. Now, institutions, they don't always get it right, but when they pile in, it signals convictions. So, those are the catalysts. In my next video, I'm going to cover the risks. And trust me, you're going to want to hear the risks because that is where most retail investors slip up on. So be sure to like and subscribe so you don't miss it. Okay, so with all that out of the way, is Applied Digital stock a buy? Well, a consensus among 10 analysts rate Applied Digital stock a strong buy with a high target price of $30, which suggests as much as 36% upside from today's price. The average score is 4.7 and has increased over the last 3 months. When analyst sentiment is moving up, it usually means that earnings are starting to line up with the story. So here's my take. Applied Digital has moved from narrative to numbers. The CoreWeave contracts, the high-performance computing centers, renewable proximate locations, and of course, deepening institutional base, all points in the same direction. Scale. Bottom line, I see this as a high conviction AI infrastructure build-out story where contracted revenue, capacity turn on, and institutional alignment can drive the next leg higher. If execution stays on track and Polaris Forge hits its milestones, this run may just be the start, not the end of the move. And remember, markets reward execution, not promises. That is the line to watch. But what about you? Are you buying into Applied Digital and what they're doing right now? Let me know in the comments below. And while they're there, if you found this video helpful, don't forget to like and subscribe. It'll help the channel, it'll help others find the video, and of course, it'll keep you in the loop for my next deep dive. Well, folks, that's it for me today. Thank you so much for watching, and I'll see you next time.